We saw sterling move higher yesterday above 125 against the dollar in anticipation of this result. And so far this morning, last time I checked, we're just sort of washing around a little bit below that. So it hasn't had a huge impact. That, the next big test, really, I think, for sterling is where the economy goes rather than Article 50 being triggered, which kind of will still happen.
Now, Kit, from a standpoint of looking at how corporations are going to view this move in pounds, we know the FTSE 100 is very weighted towards companies who have a lot of exposure outside of the UK borders. What exactly is the forecast for how pounds do react, and what does it mean for many of these companies that have a lot of their revenues out there outside of the UK?
Well, they've had a big boost in terms of obviously their sterling-denominated revenues. Not all. You have some buy, for example, oil in dollars, and it hits their costs. But I think that the outlook from here, I mean, my sense is sterling's likely to be washing around in a range for a fair amount of time. The UK's got a weakening economy, the biggest current account deficit of the major economies, the lowest real yields, and the weakest currency. And how much weaker it can get, I think, is uncertain in my mind in terms of boosting those share prices, just because the only catalyst for the pound to fall from here is things get worse for the economy in a material way.
Kit, let's talk about the dollar. There are so many factors right now influencing the dollar, not to mention Trump talking about the dollar, Mnuchin talking about the dollar, border taxes, repatriation, corporate tax reform, trade tensions. All of this impacts currencies. What's the upshot? How do you forecast where the dollar goes next?
It messes around until we get a clearer story. Remember, the rally in the dollar that started the day after Donald Trump won the election last November is based on the idea that the U.S. is going to have more accommodative fiscal policy, stronger growth, more rate hikes, more monetary policy divergence with others. So far, we've heard an enormous amount about trade policy, about unraveling multilateral trade deals. We haven't heard the stuff that would be encouraging for the dollar. So we're in partial reverse.
Can you just clarify that? So trade barriers and trade tensions, that's negative for the dollar?
It's more negative for the people who suffer most. So trade barriers with Mexico are worse for Mexico than for the U.S. But the more protectionist you get around the world, the more capital is tempted to stay at home. And the U.S. runs a big trade deficit, big current account deficit. The biggest winner of all to a really protectionist world is probably the Japanese yen in currencies, not the US dollar. The euro would be a big winner, if we get past the European elections. So it's not as obvious. What really helps the dollar against everything is monetary policy divergence and economic outperformance. That's something people were betting they'd get from the Trump presidency, but we've heard much less about that so far.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.